this is just the one that we found to work in the little space that we got, and we had. Get there. Dave Krueger, you're back.
I'm back.
You're back, and a lot's happened since we last spoke.
It has.
There's been a crazy, well, not crazy, but things have happened in the market, and I could say a funny thing happened on the way to the Fed. In a way, the last time we spoke, we're still sitting at pretty decently high interest rates, and the quickest rise and one of the longest holds that we've had.
Right.
And then about 3 weeks ago, the Fed dropped their lending rate.
The Fed rate, yep.
And everybody was expecting, the Fed's dropping their rates, so everybody else is going to drop their rates because money is now cheaper. But guess what happened? Rates went up. Mortgages got more expensive.
Yes, they did.
Now, why would that happen?
All right, so I'm going to set a little bit of a preamble here for this conversation.
Perfect.
I will guarantee you're going to ask me questions that I simply don't know the answer to. So much of this interest rate thing and what the Feds do and how that correlates to bonds in the stock market and how it then dovetails into mortgage rates. I know enough to be dangerous. So let me lay a foundation. My job essentially is I have several different outlets and sources that I subscribe to of people who are just better at this kind of thing than I am as far as predicting the rates because they're actively involved in the bond market. Their jobs are to make money off of the market, so they try to predict what is going on, and then they tell me, well, not tell me directly, it's not like I know these people, but then they put out reports saying this is why these kinds of things happen. Mm-hmm. So what I try to do for my clients and my referral partners is that I try to get that information, decipher it, and then put it out in a very user-friendly kind of format. So that makes me dangerous enough because I know what's going on generally, but I don't always know why it's going on. So I'll answer your questions to the best of my ability. Going back and setting some foundation too, right? We actually had a period where rates were, 2%, 2.5%, which was artificially deflated. Actually, I think horrible for our economy. We are now correcting that, and we overcorrected like we typically do. Think of a huge ship in an ocean, right? And you got a drunk sailor at the helm who's swinging the wheel back and forth, and that's what I call the Feds, drunken sailors, and they're trying to find the right course of action. Now, when the Feds raise or lower the rates, what they're typically trying to do is they're trying to control market inflation on our economy as a whole. So when you get people predicting rates and when you get lenders that are attributing certain rates to different products, conventional loans, FHA loans, VA loans, all that kind of stuff, what they do is they look at not only the current market, but they look at the bond market and what the investors are doing, and they try to predict in the future. So how that really came into play with this Fed rate is it was pretty much understood that the Feds were going to cut the rate by 0.25%. Then as we led up to the Fed meeting, things started looking better and better, and they decided, you know what, I think we're actually going to cut 0.5%. Well, here's what a lot of people don't realize, is the market knew that. That's their job to know that, is what the Feds are thinking as much as you possibly can. Mm-hmm. So what happened is lenders were already pricing in better pricing, generally speaking, in anticipation of the Fed rate coming. When the Fed rate finally did come, and the Feds cut the rate 0.5%, a couple things happened. First and foremost, that Fed rate is very different than a mortgage rate. Mm-hmm. The Fed rate affects things in general like your car loans typically, personal loans, credit card interest rate, things like that. It does not directly affect mortgage rates, but they are all tied together. So when the Feds cut the rate 0.5%, just like you said, the general population thought, well, I'll be damned. Everything's 0.5% lower. This is fantastic. And it's simply not, because it doesn't directly affect the mortgage rates. What caused more confusion is that, remember, the markets had already been pricing in this cut for weeks at that point. So when it actually moved, nothing happened in the mortgage world because they had already predicted it. In fact, on the heels of that, as often happens, Mr. Powell got up and he spoke, and he came out and said that we are not in a hurry to continue to cut rates. We didn't know that. We didn't know that he was going to say that. Mm-hmm. By we, I mean the bond mortgage market investors. So what that does, that actually put a negative spin on things, saying, okay, Fed just cut a rate because they like inflation, but now he's saying they're not going to get aggressive, and we had a negative reaction. Mortgage rates actually rose when the Fed rate was cut, caused mass confusion with everyone out there on why that happened. Understandably so, right? This is kind of a weird little beast, but that's in a nutshell what happened and why rates rose when the Fed's actually cut them.
Interesting. Okay.
Not really. It's really not interesting.
Well,
but
it is.
I
it
geek
is
out
to
on
me.
it.
It is to me. I find this stuff fascinating. The whole way our system of money works, I think, is a lot more intricate than a lot of people think.
Right.
Right. There's a
Right.
lot more going on behind the scenes, behind your dollar bill than a lot of people expect.
And the world is interconnected on our financial system.
Yes, and that's kind of a scary thing that might be changing significantly as well.
It's true.
The U.S. dollar has been the global trade currency for basically since the end of World War II.
Right.
Oil is traded in dollars.
Mhm.
All these transactions are settled in dollars, and there are some things happening in the world that are making the U.S. dollar less and less the global reserve currency.
That's
and
true.
that's kind of something we need to watch out for and plan for as well in our personal lives. There's BRICS, which is becoming increasingly more popular. That's the coalition between Brazil, Russia, India, China, and South Africa, and they're pulling other countries into their conglomerate, basically, to start settling transactions in other dollars, and this could affect us here at home
Right.
quite considerably,
Right.
which is going to be interesting to see how the Fed responds to that. From my understanding, the Federal Reserve, I mean, they have their mandate where they try to control inflation through they want to see 2% inflation.
That's their goal. Yep.
And control that through interest rates, but they don't necessarily control that. They're more of a responsive crew, and I like that analogy of
Yeah.
them being drunken sailors on the
Right.
high seas, because that's pretty much what they are. The global monetary system is the high seas, and
Right.
they're trying to steer the ship, but they're not necessarily directing the waves.
Right.
They're responding to the waves that come in, and that's where we get
Right.
the mix of interest rates and lending and that sort of thing.
So let's talk about the waves.
Yeah.
There's two big waves that typically come out for us lay people to be able to decipher what's going to happen. One is called the Bureau of Labor Statistics Report, or BLS Jobs Report. I'll talk about that in a minute, but essentially that says how many new jobs were created in accordance with how many jobs they thought were going to be created. The other report is called the CPI Data Report, or Consumer Price Index Report. The Consumer Price Index Report typically tells what Americans' spending habits are. Are they declining? Are they increasing? What happens? So let's break those down a little bit. First, let's go to the non-fun one, the CPI report. The CPI report typically is the biggest hitter of both of those reports. When you see Americans continue to spend frivolously, inflation is not being curbed. Feds want to have the interest rate high enough to where it hurts to spend money. That curbs inflation. But when you see the Consumer Price Index report come out and Americans are still spending a bunch of money, it's obviously not working. So that's not good for the economy, because inflation is still high, and not good for rates because Feds want to keep them high. But then something came out this last week and a half that was really interesting, is a BLS jobs report. That always plays a little bit of factor into this, but this one played a big factor into it. And that's because it was really on the heels of that Fed meeting and what Powell had said. And they had forecast, and they're usually decent at forecasting, they had forecast, the Feds, 140,000 new jobs nationwide being created. If the report would have come in at 140 or less, that's good news. Because remember, we want less jobs out there. We want Americans to be hurting a little bit. That curbs inflation. So we wanted 140,000 or less. 254,000 jobs is what were created. So I equate that to you getting in your car in Missoula and trying to drive to Seattle, and you wound up in San Diego. That's how big of a miss that puppy was. So it was so huge that freaked the market out. And from the raise that we saw after the Fed meeting, We saw several spikes since. We're still at a spike. Now, keep in mind, we're still at some of the best rates we've seen in, 16 to 18 months. But it's still not great. This spike, we had about a 0.25% raise across the board in a night. So that BLS jobs report just shows the economy is not doing what the feds want it to do.
Yeah, there's still a lot of headwinds, as it were.
Yes.
All right, well, that's the national and somewhat international market. What are we seeing like trending locally?
Man, locally, and this is really interesting because I'm sure I have a very different perspective than you do. We work on same kinds of transactions, but I see the financial part of it. You see the actual sales part of it.
Yeah.
So, the financial part of it, really, we don't see a lot of change in that people are typically 3 to 4 weeks behind the curve. And a lot of that has to do with CNN and Fox News and all the reporting agencies that simply report things that happened last week. Well, here's the thing. The market changed 9 times since last week. So they're always a little bit delayed. So what we're seeing on the financial aspect of it is people, again, are getting tired of renting because you're paying 100% interest rate on rent, right? You're never getting a tangible benefit. And they're realizing that, hey, Uncle Joe, who said the market is going to crash, guess what? Uncle Joe's wrong. The market is not crashing.
No.
And it's not going to crash. So they look at that. They look at the interest rates. They look at, oh, hey, CNN reported that they're a little bit better. And people are starting to get more and more into the market. So I would say that it has been steadier than I expected. Here is the thing, the intangible that people don't understand financially. We don't want rates to plummet. That would be a really, really, really bad thing. And here's why. If rates are at 6% right now, and you're looking at a $500,000 house, if rates go down to 5%, that house isn't going to sell for $500,000 because the seller of it knows darn well they can get more money for it because it's more affordable. So that $500,000 house is now going to cost you $530,000. So it actually makes things more unaffordable when rates actually drop in spades. So we want to see super, super slow ticks down. So, what we're seeing a fairly constant market of people trying to get into it, buying their first home, being uncomfortable with that payment because that is our world. But here's what we tell people. You're making the least amount of money right now than you ever will in your working life. Next year, the year after, you're going to get raises. You're going to get cost of living raises. Things are going to get easier. So why not cement that house price, cement that payment now, and then you're more comfortable in a couple of years. So really financially, I don't see a lot of difference than we did 6 months ago.
Yeah, interest rates are holding relatively steady. They're not going all over the place,
right?
Which is good. I do agree that, if we see a massive drop in interest rates and mortgage rates, that things are going to get more expensive for people.
Right.
It's going to bring a lot more people, or a lot of sellers. Maybe more sellers back into the market.
Right.
But there's going to be a little less competition from buyers because things are the way they are with the money in our pockets at the moment, and they can't get that much more. They're not going to get 5% more cash
right.
overnight.
Yep.
They will over time, and that's exactly the kind of mentality that I try to cement in people that are looking for homes. Is like, yes, it's the way our monetary system works is that we are going to continue to print money.
Right.
And right now we're trying to reduce the the M2 cash flow. Basically, we're trying to reduce the amount of money that's out there floating around and pull it back into long-term holdings, so bonds and treasuries. But eventually, things are going to happen where the Fed's going to reduce rates a little lower, and you can refinance your home at that point in time. And guess what? Then you start to save money.
Yes. You'll
have a little more money in your pocket in the end, but you're not paying any more for the house at that time. You locked in that price, more or less. And you're going to gain more equity because of that, too. Because, when interest rates are lower, like you said, people are going to be able to charge more for their home, which means that your equity is going to increase when your neighbor sells their house in 5 years for 10% more than what they bought it for.
Yep. That is why math wins every day. 1 + 1 = 2. And having a good team behind you, if you're going to buy, if you're going to invest, if you're going to sell, is so absolutely critical because let's be honest, I will guarantee I can walk out on that street and in 5 minutes I will have had 10 realtors drive by me. They're everywhere.
There's a lot. Yeah.
Mortgage. Look at Rocket Mortgage. Look at all these national mortgages that do not have your best interest in mind, but they're everywhere. You cannot turn on a TV or flip through a magazine and not see an ad for one. Getting someone local who you trust, who knows the market, and who can articulate the numbers like you just did, where the best time for you to buy was yesterday. Statistically and mathematically, the best time was yesterday. It was, and it will always be that. And why is that? And then work with that lender, work with that realtor to be able to explain everything to you. And while you may not like house prices, while you may not like interest rates, this is a long-term investment. And as long as you have that team that is working with you to make sure that you are getting the best bang for your buck and you're being financially reasonable and sound, it is going to be a good investment for you.
But Dave, we live in such a world where where we want instant gratification,
Yes,
and we need to have it now, and you know, I need to see the equity growing in my house instantly. And well, I mean, there's a few cases where that can happen if you pick up a good property and you make a few improvements and you can improve the curb appeal or something like that. But for the most part, these are long-term efforts, and we need to be comfortable with that.
Yes.
You know, the long-term capital gains you can pay on a home is 2 years, or when you get to long-term capital gains.
Right,
It's not
right.
a year like other long-term capital gains. It's 2 years. So that in itself shows that owning a home requires a bit of a different mindset already.
Right.
That you need to be comfortable with. Yeah, it's a big investment. It's a big purchase. But nationally, the people that own their homes have considerably more personal wealth than people that do not. Because yes, when they're paying that mortgage, they're paying a lot in interest up front. Over years, it gets diminished. But like you said, when you pay for rent, that's 100% interest and nothing towards the equity. You own nothing.
Right.
And you are not happy. In complete the opposite of what Klaus Schwab says.
Yeah. And you know, I think that your personal home will be the best financial investment you'll ever make, and that includes maxing out your 401k contributions. It is a better idea based on market appreciation in Western Montana to own real estate, own a residential home, versus maxing out your 401k. And of course, there's advantages to both, right? But at the end of the day, when you look at your best single financial asset, it's going to be your home.
Oh, it's true. They do stock splits all the time. There's always something happening in the background.
Yep.
I mean, you know, not to get political, but I mean, Nancy Pelosi is more successful than the markets by her investments. She's beat the market by considerable amounts. But there's always some weird things happening there. But guess what? They're not making any more property.
Yep, they're not.
Especially around here in the
Yes.
Bitterroot Valley in western Montana.
Yep.
We're kind of constrained. We can't go out. You know, in contrast to Bozeman,
Right.
I mean, we get this big urban sprawl,
Yeah.
which, I mean, eventually it's going to hit a
Walls.
boundary there.
Yep.
Because there's mountains as well. But here in the Bitterroot Valley, especially in Missoula, I mean, we can only grow out so much.
Oh yeah.
You know, I think, what is it, like 80% or something of Ravalli County is Forest Service?
Really? Wow.
It's a huge amount.
Yeah.
I mean, if you look at it on a map, the map of Ravalli County, it's only the sliver in the middle. You know, a couple miles on either side of the river, unless you go up to Steveye, then it goes almost to Phillipsburg out there, where there's actual privately held land.
Yeah. I know.
You can't. I mean, you can only subdivide that so much before the county's not going to allow it, because we are limited by septic drain fields in a lot of areas around here. So if you're looking for a place in western Montana, it is a great investment for the long term, for sure. It's not going to be one of these things that you're going to turn around in like a day and be like, oh, I just made like 20%. It's like, that's not how this works. I mean,
well, let me ask you a question, okay? From your realtor professional perspective, you have a client that comes to you that says, I'm going to be here. I don't know if I really want to end up living here long term. I figure I'm going to give myself at least a year. Do they want to buy a house, or do they want to rent at that point if they're going to be here for a year?
A year?
Yep.
It depends on their financial situation, of course. But I would default to saying it might be better for you to rent.
Absolutely.
Because, going back to the long-term capital gains, I mean, if you end up selling and you have any equity in that house, you're going to be paying a considerably higher amount in taxes when you sell that place.
Right. Now, How many people have come to you this year and said, I'm only going to be here for a year, so what should I do?
I haven't had anybody, actually.
Mine is 0 as well.
Yeah, I haven't had anybody say that we're coming here for a year because, well, guess what? When people come here,
so get off the damn fence, people.
they want to stay.
You're going to be here this is a long-term purchase. You have to live in a place. You have to rent or buy, so buy something.
Yeah, I mean, and unless your job is something temporary, and you're only going to be here for a year, it doesn't make any sense.
Right.
But if you're here for the long term, you're here for the long haul, invest in that.
I know.
And make it make sense. You know.
We digress a little bit from the Fed rate, but still, it's important.
It all kind of relates to each other because honestly, I think the Fed rate is a lot of the mentality of the general population too. Right. That's a huge factor of what moves markets for the most part is how people feel about it. Right. And that's also one of the Fed's jobs is to telegraph what they're doing so they can get the market to respond ahead of time in a way so it's not a huge shock when they do something.
Right.
You know, Jerome Powell has a very interesting job, honestly, because it's not an arbitrary thing and it's not like solely based on math. I mean, there's a lot of mathematics involved, but it's also dealing with people's emotions.
Right.
Because, you know, like the classic that classic quote, "You play with my money is like playing with my emotions," huh?
Yeah. And you know, I think to address an elephant also that comes up with me a lot is it's an election year. So things are going to change right around the election. Here's the deal. Maybe the next Fed meeting is November 6th and 7th, I believe. That's weird timing, isn't it?
Odd.
But here's the thing. In theory, the Fed rate should have 0 to do with the actual election because the interest rate is based off of those key reports. And those numbers are going to come in regardless of who gets elected. Those numbers are still going to come in with whatever the survey said. So the Fed rate should not change based on who came into office.
You would hope.
You would hope.
You would hope. We will see.
But there's also a lot of transparency in those numbers. And even though it's easy to say, well, yeah, but conspiracy theory says if this person gets in, the rates are going to do this. Just understand that because those numbers are transparent in public reports, there would be a hell of a lot to answer to if all of a sudden it started to go against the grain and go against what it's been doing for the last several years, right around the election. And I want to say I have enough faith in America and democracy that it couldn't do that at least easily. We'll see.
We're hoping. We're hoping. I mean, that's... oh, shoot. I just had a great little thing that I wanted to say, and I totally blanked it. Well, yeah, the other thing about the Fed, too, the funny thing sometimes that happens is they come back and they revise those numbers afterwards.
They do.
You know?
Yep.
Yeah, they're like, oh, here's the initial thing, and then the market responds, and then like 2 weeks later, like, and here's some revisions. This is actually what we found.
It's like the best two things you could be in life would either be a Fed statistician or a weatherman. You know, I mean, a weatherman, you got a 50% chance. A statistician, you just revise a report.
Yeah.
It wouldn't be too horrible.
Well, the data, we were waiting on this little data point, and it finally came in a day late.
Yep. Yeah, I know.
Oh, well, I had a sticky note. Where'd it go? The questions. I pulled some of my colleagues here for some interesting, if they had any specific things that they wanted to know about. And one of the things, because we've seen with the holding of the interest rates where they've been, one of the intentions is, of course, yes, making money a little more painful to spend. And with that means that house prices are going to retract a little bit. Not crash. That's not. I also agree that that's not going to happen. We're not in an environment where.
How about correct? They're going to correct.
They're going to correct, and that's very different. They're not. We're not going to see like a 2008 sort of financial market.
Right.
But we're going to see things come down, and we have over the last 2 years. I mean, especially in the last, I would say, 6, 8, 9 months, there have been considerable amounts of price drops on homes. Significant. Right. I mean, almost every day when new listings come on, there are nearly as many price drops as there are new listings. And sellers are starting to realize that maybe their homes aren't as valuable as they were
Right.
2 years ago,
Right.
which makes sense. If there's less people willing to buy, well, we got to
Yep.
find that area where someone goes, okay, that's a good deal. And with that, so we're starting to see prices come down. And one of the things that we have here in the Bitterroot Valley is the Montana, well, not just Bitterroot Valley, but Montana, the Montana Board of Housing,
Mhm.
and they have specific loan programs. Have you seen any of those loans starting to come through for the affordable housing from?
No, the Board of Housing programs have to be run through a very specific type of lender.
Okay.
So I do not see any of this. Yep, you have to be a brick and mortar, actual FDIC institution
Okay.
kind of thing. And I'm a broker, so
Right.
very different there, right? Banks and credit unions, they fit that criteria. My job is to pull lenders across the nation and see who has the best rates, term, services. So it's just different apples, oranges.
Okay.
I just don't see this.
Okay. No worries.
Yeah.
Do you have anybody that you would refer to for those specific?
I mean, I think, if you're looking for the Board of Housing loans, I think that talk directly to the Board of Housing and see who they suggest on it, because
Okay.
based on your criteria, they should be able to refer you to
Right.
the right place. I think that what people often get hamstringed on a little bit is they think that those are given out like candy and that they're super easy, and that they're going to save a ton of money and they're going to get grants and all of this kind of stuff is going to come through. And the old adage of if it sounds too good to be true, it maybe is, applies a lot with those. So I think you just have to be careful, because if you look into, here's a good example. If you look into a financial institution, you look into a bank for that Board of Housing loan and it does not work, and they pivot and then start to talk to you about a normal conventional 3% down loan, something like that. That simply mathematically is not going to be in your best interest, because they're not going to typically have the best rates as like a brokerage would.
Right.
So you may want to go to them for one thing and not the other. So utilize your ability to be able to shop.
Perfect.
Yep.
Perfect. Yeah, that's a thing that I want people to realize too, is it's your money that you're putting on the line here, your livelihood. So take the time to shop around.
Yep.
Don't just go with the first one that
Oh yeah,
thinks is giving you the best deal.
for sure.
Take your time.
Yep.
Take a couple looks. I mean, most often, especially these days, because things aren't moving nearly as fast as they were back in 2021, you have the ability and have the time where we can negotiate that in the contract,
Right.
that you can take your time
Right.
and make sure that we get you a loan that makes sense.
For
And-
sure. Intelligently shopping is the tough part on it,
Mhm.
because the market moves so much. I mean, I've seen market movement of over, what was it, I think 4 weeks ago, I think we saw 23 rate changes in the market in 1 week, in a 5-day business week.
Wow.
So when you shop someone on a Monday and you shop someone on a Wednesday, you didn't do anything. You literally didn't do anything, because pricing has changed. So if you're going to shop, you need to get your ducks in a row. You need to know what you're doing, what you're asking, how you're doing it, and you need to shop the same day. Otherwise, it's apples to oranges. You're not really doing anything.
It's another consumer good. Think of it like when you go on Amazon, you're looking for that item. Read the
Right.
reviews, look at the thing, look at various different versions of the same thing, see what people are saying. If
Yep.
this one looks cheaper up front, but if it's a less quality product, maybe it makes sense to go with one that's a
Yeah.
little more expensive that will give you what you're looking for.
Sure. There you go.
In a nutshell, I don't.
Yeah.
Not saying that buying a house is the same as, well, you
Yeah.
can buy houses on Amazon anymore. I've seen.
Yeah, right.
What about modular homes? There's a lot of those around here in the Bitterroot Valley and also in Missoula. Well, just around Montana in general. Usually they're a lower barrier to entry for a lot of people. Not just, and I'm not talking just mobiles, but anything modular or manufactured rather. That term, manufactured home. There is a possibility to get lending on those. What are kind of the details on that? Because they're different usually than a single family home.
They are a huge topic here. I'm going to boil it down in about a minute.
Perfect.
Mobile, manufactured, modular, all very different. Mobile, it has a tongue on it, it had wheels on it, it was moved, it can be picked up and moved by your truck again. That is a personal loan. You cannot get residential refinance or financing on it. Manufactured home. Manufactured home was moved there by wheels, and then it was set on a permanent foundation. It has to be built after 1976. It has to be properly detitled with HUD, and it has to have only moved one time from the manufacturer to the property. If it meets those criteria, you are eligible for residential financing. Your residential financing will be slightly higher than normal stick-built financing. That is because lenders have identified that a manufactured home is slightly riskier, meaning they do not appraise typically quite on the same level as a stick-built, and in addition, they don't typically hold up as well as a stick-built. So they're a riskier 30-year fixed-rate product. So let's say that your average rate is 6%, whatever. On a normal stick-built, manufactured, you're probably looking at 6.25 to 6.5. So keep that in mind. Residential financing, no problem. As long as you have all of that criteria, it's fine. Here's something that a lot of people don't understand, however. You have a manufactured home, and you have any addition to that home. You put on a porch, you attached a garage. Any addition attached to the home has to go through an independent process of certifying that it was built to code. That's a pain in the butt, and it can cost money, and it can take time. Keep that in mind. Modular home. Everyone says modular when they really mean manufactured, what I just talked about. Modular, I have never seen a modular in my career. I've never done financing on one. They're out there. I know they're out there, but modular homes are built in full panels, brought to the site and constructed exactly like stick-builts are. They are treated as stick-built. They are financed as stick-built. It is walks, talks, quacks like a stick-built home. Rates are the same, everything. They are out there. I've seen them out there. One was built not far from my house, but I've never done financing on them, so they're not super common.
Right. Yeah, we do have a modular manufacturer here in the Bitter Valley, Whisper Creek,
Okay.
that does those. But I think they ship. Most of them are going out of state these days. It seems. Those are kind of higher end things too, and I feel like those are. I think they have they do kind of almost a car sales thing where they can do in-house financing or something like that, maybe.
Right.
What's happening in your world? Anything else interesting that we didn't cover?
Really, I just think that it is so critical that people just educate themselves. Don't listen to Uncle Steve about the market. Don't listen to people outside of your circle or who bought 5 or 10 years ago, because you and I both know the world has completely changed. The lending world from 10 years ago is completely different. Educate yourself, and there's nothing wrong with that. If you get a good lending partner and a good realtor partner, you should be able to have those conversations with them in a very transparent and direct manner to educate yourself on what they think is the best options for you to do. You should never either have a lender or a realtor that pushes a sale. The sale is good for you or it's not good for you.
Mm-hmm.
It's not something that someone should force you into ever. So utilize your resources, get educated, and then make an educated decision. And if that decision for you is don't buy a house right now, that's okay, because it's your decision. But don't make decisions based on what someone else is telling you who is not involved in the market, who has a speculation that the housing market is going to crash and we're going to get invaded by aliens. Don't believe them. Talk to someone who knows what the hell they're doing and lean on them to make your decisions. And I think that overall is the biggest thing. And just make sure you're going with someone who is patient, who can take the time, who's transparent, and who doesn't beat around the bush.
I can't agree with that more. Education, I mean, it's a consumer good,
Yes.
in a way.
I can't tell you how many people I've had come to me, and we have the conversation, and for whatever reason, it doesn't matter. They decide that now isn't the right time. Cool. 3 years later, I'm still talking to those people, and they end up buying a home because now's the right time for them.
Mm-hmm.
Okay, financially and mathematically, was it a better idea if they bought 3 years ago? Well, for appreciation, yes, of course. But maybe it didn't fit into their life, and there's nothing wrong with that. So as long as you're having those conversations and you're educating yourself, you're setting yourself up to succeed.
Yeah, that should instantly throw red flags if you're being pressured
Absolutely.
into purchasing anything,
Yes.
whether it's a house, a car, burrito, I don't know. If
Yes.
someone's just trying to convince you to make the sale, that's a little bit different.
I agree.
We get a bad rap as realtors, I think, for things like that, where we're here solely to assist you. We are here to give you the opportunity to find the most information, the best information, walk you through The systems connect you with people that can also help you make the best decision. And my job is not to go, oh, you should really buy this house. You need to buy this house. That's not my goal. That's not our goal here at this brokerage. I can't speak for other people, but we are here to assist you to be the most successful in a transaction.
Let me ask you a question.
Please.
Does every single realtor in the Missoula or in the not Missoula organization realtors in Western Montana, do they all have your exact ethics, parameters, transparency, and communication style?
I cannot speak to other people, unfortunately. I would hope that they do.
That they
No, they we do, as realtors, have an oath that says that basically that we we need to behave ethically. We need to. Our job is more or less what I just described.
But everyone's different.
But everybody's different, and not everybody takes it seriously, unfortunately.
Exactly.
Yeah.
So here's the thing, right? There's nothing wrong with making sure that you jive with the person you're working with.
Absolutely.
And just because you made that initial commitment to that person, if you find out that you guys don't see eye to eye on things, there's nothing wrong with switching.
No, nothing at all.
Same with a lender. Say, I used to be a cop, right? So law enforcement, I mean, I can't tell you how many times, well, I heard this one cop was such a jerk. Yeah, you know what? There's bad cops out there.
Mm-hmm.
People have bad days also, but everyone is different. Same thing with realtors, same thing with any single profession you ever get out there. McDonald's workers, some are lazy, some are the hardest workers you've ever seen in your entire life.
True.
You can't classify one entire group into one little pigeonhole. So talk to your realtor. Find the one. If your realtor starts to make you feel like you're being pushed into a transaction or you're looking at houses you don't want to look at, et cetera, have the conversation with them. I don't want to do this or X, Y, Z. And if it doesn't change, get another realtor. Same thing with a lender.
That's one thing, one great positive I think that came out of the recent forms change that we've had is that we make it very clear on the piece of paper that people are signing now, because it used to be a little less clear. It would have to be ourselves that were explaining this. But it makes it very clear on the sheet of paper. And we also have a new form called the Limited Service Agreement, which is it expires 3 days from its execution. So when all parties sign it, 3 days later, that form is no longer valid.
There you go.
So you only have to work with this person for 3 days. That gives both the realtor and the buyer the opportunity to get to know each other. Mm-hmm. And if you work well together. And if you don't, no obligation to continue the relationship.
Right.
And I think that is going to help incredibly the consumer in this side, because they're not going to have that obligation of like, well, I signed that thing, I just have to work with this person now, even though I don't like him.
Right.
Because guess what? You can also fire us at any point in time.
There you go.
Even with an exclusive buyer-broker agreement, you can still go, I don't want to work with you. But it's a hard thing for people to say, I think. It's a challenging thing for someone to come up and say, listen, I don't want your service. And we do the same thing on our side too. Like, we have clients that we've worked with before, and, after a period of time we go, listen, I don't, not that it's not personal, your style of what you're looking for in someone to help you is not the style that I have out there. We don't jive, as you say. And listen, I know somebody else in my office that I think could help you much better, because we all have different personality types, and there's different ways to convey information. And I think this individual can help you in the way that you want to be helped and that you're most comfortable being helped.
Right. Nothing wrong with that.
And there's nothing wrong with that. I take no offense at it. Of course, that's a hard thing for some, on both sides, for people to get to that point of being like, it's really uncomfortable at first, but how much less stress is it for everybody if you both are excited to work with each other? It's a totally different dynamic, and it doesn't feel pressured or strained the entire time. And because that's not what I want when I work with anybody anyway. Buying a house is stressful enough, and I don't want to contribute to that portion. My job is to alleviate some of that stress.
There you go. I like it.
Perfect. Well,
Cool.
I think we solved the world's problems again, Dave.
We tried. At
We
least.
tried.
Yeah. We tried to explain what the feds are thinking and probably failed miserably. But
Well,
who
that's what
knows,
my
right?
crystal ball's for.
I know,
To go
God, right?
consult that thing. And
So the two questions I get all the time is what are rates going to do, and is now the right time to buy? That whole thing with what are rates going to do, guys. If I knew that, I'd be in Vegas using my crystal ball versus here.
boy,
That's just
I know, right? Holy cow.
yeah. So
Yeah, it's
Cool.
I get a similar thing. It's like, well, we really like that house, but we wish it was over on this piece of land. It's like,
yeah, but it's not.
if I could do that,
You would okay. You would
Just-
be really good if you could do that. You'd sell a lot more houses.
oh, are you
You should
kidding me?
try it. Yeah, just try to move it.
I'll just pick it up.
Yeah.
And, you guys want to swap?
Yeah.
Like,
There you go.
Dave, I appreciate you coming down.
Thank you for having me.
Great conversation as
Yep.
always. Yeah, if you tell people how they can get in contact with you, I know
Sure.
you have a weekly email you send out.
Yeah. I think probably, the direct route is they can just call me or text me on my cell phone. It's 406-240-9686. I'm broker owner of Montana Family Mortgage. You can search us. We have the most 5-star Google reviews in the entire state of Montana. And we are tiny. So easy to find us online or contact you and you can get them a hold of me.
Please do.
Cool.
Yeah, love it. Yeah, once again, thank you,
All right.
sir.
Thank you.
Catch you guys later.
All right.